Hey everyone, hope you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go. It's most likely going to be related to three different topics: wealth building, financials, and/or commodities. And let's dive in here. Let's see what's going on and what people are sharing. You can follow me at finding_finance, and you can join our community at finding-value.com. We still have LEAP coupon code, which it's leap day today. I will be releasing this on the 1st. It will still be active, but we don't have much more time for that coupon code to be active. Just an FYI. So let's get in here. We've got crude oil net positioning money managers. And right now we are at a very low position, which means we could see this dramatically increase to the upside. What he said is a breakout could be violent as net positioning is extremely low. Very well could be the case if and when oil breaks out of its little resistance area that we're at. We could see a big move in positioning by managed money in terms of where this ultimate level is at and how low it is. Sentiment is still pretty negative. Dominic says it's tulips. It's a bubble Bitcoin. So he goes and shares his opinions about Bitcoin and how it is basically it's tulips, the tulip mania of 1637. While the recent major pullback in uranium may have some investors questioning their conviction, the accelerating global nuclear renaissance continues to drive U308 demand to record heights. If anything, this pullback in spot and share prices further strengthen the bullish supply-demand fundamentals, as reduced uranium prices and slashed market caps for mine developers could further supply response by making it more difficult for miners to justify mine restarts and new construction decisions and harder for them to raise the capital needed to bring on new supply. So even though we've got a pullback in uranium, I know some people get scared because they use price to justify either being scared or the narrative behind it. The fundamentals haven't changed at all in the uranium space. This is really just market volatility. It's positioning, sentiment. It hasn't changed anything in the underlying fundamentals of uranium. We're not producing more because we've got a sell-off in the uranium sector. It's not like the uranium sector is selling off because of the fundamentals. It is selling off because a shift in market sentiment. That is it. We've got boom, there it is, guys. Energy now year to date leader in the markets. Funny how so many get all excited to post any negative news they can find. Yet here we are. So let's look at this. Let's see what we've got here. We've got energy in terms of the heat map. Energy, oil and gas, they're up there at the top. At the bottom is healthcare, consumer discretionary. And then year to date, we've got energy up 8.75, industrials up about 8, consumer staples, oil and gas, it's all up at the top there. I do think that that is going to continue to outperform. We've got really poor sentiment in energy in general, and everyone is shifted to other sectors at the moment, like technology and stuff. But energy is going to come raging back. Why? Because I think there's going to be tightness in the market. Oil and gas and energy. There'll be tightness. And then it will be fun. And we're buying at really low areas. Even natural gas, I think, is in a very good location. Because when things get shifted to one side, it shifts back. And we want to get that shifting back and capture that move. And energy is shifting back. Cross-border says you can see the effect of gravity on an apple, and you can see the effect of liquidity on a bond. Gravity is related to relative mass. Liquidity is related to the relative masses of money and issuance. So that's his opinion. I know there's some people out there trying to say like his measurements of liquidity are not valid, perhaps. Because he says, by the way, gravity is a coefficient used for a mathematical equation. And the same be said for liquidity. Liquidity is similar to, well, it's not really gravity. Gravity is a fact. It's based off of the size of the mass, and then how close you are to that mass, basically gravity. Liquidity, I think, is a little bit different. Liquidity is more like the lifeblood of bonds, because bonds are a fixed rate, and liquidity is the ability to pay those bonds off and basically survive. I consider it the lifeblood. Gravity is more of a physical reality based off of a mass. So I don't think it's a good analogy. I would say it's more like the lifeblood of the system. Um, Net gas down 96 billion cubic feet, I believe. Yep, minus 96 billion cubic feet. This is the working gas and underground storage. You can see that we are still outside of the 5-year average, pretty high. We do have warm weather, but we also have increasing power burn. So how is this all going to, work its way out? I know we've got pretty good declining production as well. It's a complicated multi-variable equation. We've got weather, we've got power burn, we've got LNG terminal takeaway capacity, and then we've got production on supply. We'll see. We'll see. With prices where they're at, I do think that we're going to pull back on production, and we could see this drop quite substantially over the next few weeks if prices stay low. Which I'm not betting that prices will stay low though. If they do, we could see a good pullback in this figure here in storage. It says it's happening for CNQ. CNQ is Canadian Natural, is what it's called. It's an oil and gas company. So it says Mark Stainthorpe stated, through the company's effective and efficient operations and disciplined capital allocation, we have achieved our net debt level of 10 billion in quarter 4 of 23, earlier than previously forecasted. As per our free cash flow allocation policy, we will now target to return 100% of free cash flow to shareholders through dividends and share buybacks. Guys, that is what drives share prices higher. And it's going to drive larger dividends. So you've got a 1-2 punch here where if you're in the uranium space or some of these other gold and silver junior space, you're getting diluted. They need to raise money. Interest rates are high. People are looking for a way to raise cash for their projects. Over in the oil and gas space, and I'm just using this as one example, they are literally looking for cash to go and invest in their companies, and they're going to buy back a butt ton of their shares and give it back to you with dividends, which I consider to be cherry on the top. But no, let's go run against, let's go run upriver or swim upriver, or run against a very strong, stiff headwind with investments that aren't going to pay you back or even have earnings. Or you can have hurricane force winds at your back as you run, which you don't even need to run. You basically just need to spread out, and the wind will blow you downstream. And that's where you'll get these gigantic returns because they're basically creating their own buying power for their stock through share buybacks. Have you guys seen some of these share buybacks that some of these companies have done? I'm going to show you a share buyback that we've got going on. So here is AutoZone. AutoZone did share buybacks, and look what their stock has done. This is what share buybacks get you. Yes, you can get returns like that. It's possible with money flows, and I agree that uranium and some of these sectors will do very well. But share buybacks, man, they force the stock higher. This isn't just, oh, well, it may go higher. No, no, it's going to force it. And that's what oil companies are doing right now. They are literally forcing their stock prices higher because they're going to shrink their share count. They're going to increase the earnings per share because they're buying back shares over time. And then they're also going to say, you know what? Here's a cherry on top. Here's a bigger dividend. I love it. I absolutely love it. Absolutely love it. So here's uranium miners did 580% in its baby bull move and 130% in its latest move, and in an expected correction now, but still has a very, very long way to go. As said for almost 4 years, the commodity bull market will be the opportunity to get out of the rat race. Here's the real fireworks to start above the black line. We're not above it yet. It's a very probable enormous reverse symmetry move coming. This is your down move, and it's a big bowl-shaped move, and then the potential up move. So the fundamentals are all still there. The stocks are still progressing in terms of doing what they need to do with their projects or finding more uranium. But the big move is still ahead of us. It's not behind us by any means. And that's URA versus the S&P 500. A rally in this chart will cause the most amount of pain to the most amount of investors. I love that. And this is again crude oil versus the S&P 500. And we can see a big move in an outperformance of crude oil versus the S&P 500. And we've got relative strength indicator increasing. So generally when this increases, it builds first before we get the actual breakout in price. So we could see a big move in crude oil, and that could be an inflation driver for the consumer price index. Gary Savage, he says, I don't think the shorts will be able to keep oil pinned below resistance at 79.50 for much longer. Yesterday was the fourth test. The more times the support or resistance level gets tested, the more likely it is to break. I am very bullish on oil, and I think we have a lot of potential investments that will do very well when we get this oil price to eventually break out of this resistance level. Brady says, try not to get beat down by declines or lose interest during them. Understand them, be ready for them. Do not fight the market. Use that energy to improve mental balance and emotional control. And always know the very big picture. And the big picture is for silver, the mother of all legit looking probable cup and handle patterns. This is huge, guys. This is the gigantic cup, and then the handle that's forming. We're trying to break out here soon. The projected move is the size of this cup projected on top of the cup here. So we go up to the handle and project upward. On a logarithmic basis, this is many hundreds of dollars is what the projection is projecting. How does this occur? What would be the conditions for this to occur under? What I would say is something very inflationary is coming, and I think it's going to deal with oil. I think there's going to be a shortage of oil, which is going to drive a very inflationary period, and gold and silver are going to account for that. That is my guess, because that's exactly the same market conditions that occurred in the 1970s, and this is a bigger pattern than the 1970s. And if you look at the producer price index in relationship to the consumer price index, we're also putting in a double bottom, which gives us more evidence that this is going to occur, and it's going to be an inflationary push. Now, I don't know if it's from the credit side, we go into a debt crisis or problem and we just print a bunch of money. Very well could be the case. Or if it's a supply-driven problem where oil has a problem and can't grow, which then drives the price way higher from the supply side. Or it's a combination of both of those things. Supply in relationship to credit expansion. Silver is chopping out this pattern here. This is an excellent opportunity to buy the physical metal for under the cost curve of some of these higher cost producers. And it's got a gigantic pattern. Could you play the mining companies? Yeah, I have a little bit of money in the mining companies. That's my get rich movement. But yeah, I mean, that's what we're seeing. He says, first it had a picture perfect one, tuple support back test to pink handle arc. Black line, gray line, blue line plus fib 61.8%. That is stylish. Then it formed a huge bullish blue expanding falling wedge as backtest pattern. This thing's ready to go, boys. It's ready to go. I love it. I love it. The biggest bubble, or this bubble is the biggest of them all. This is tech versus the S&P 500, and we're at all-time highs up here. Compared going back all the way to 1926, we have the ultimate bubble. This could also be perhaps a Batman pattern, maybe, and then we're going to come back down at some point. It's going to be nasty. U.S. core CPI momentum has reset. This is where bottoms are forged, according to Patrick. We've got a nice little reset here on terms of momentum. And then we've got a blowout through that U.S. core consumer price index year over year. Now we're doing a retest move where we're probably done or very close to being done that will eventually turn upwards. That's that inflation component that I've been talking about. Sorry, guys, there it is. That's the inflation component that I think is going to surge. We've broken out of this downtrend line. It's very similar to the PPI to CPI ratio too, but this thing, if we turn and go back up, I think we're going to get a nasty move of inflation. I think the driver is credit related and in relationship to the inability of oil to grow worldwide. And we're going to go into probably a very inflationary period for maybe the rest of our lives until we hit another energy source, which I don't see that occurring anytime soon. It's just going to go way up in price, probably stay elevated for a very long time. Coming back. A second wave of inflation is in the making. Today's report unveiled the largest positive surprise in personal income since the surge in consumer prices began in 2021. While many investors and policymakers still view this issue as a cyclically contained, and the nature of inflation suggests otherwise. This is particularly evident due to the continued presence of extreme fiscal spending, the recent resurgence in the monetary base, and escalating deglobalization trends with wage price pressure. The second wave of inflation is coming. Here we go. And that's what we've got for today, guys. So give me a thumb up for the content. Subscribe to the channel. Subscribe to the website. Looks like inflation's still alive and well and starting to kick back into gear. And that's what I've basically have positioned for. But that's what I've got for today. We'll catch you guys later. This is Finding Value.